Welcome to the HFT Stocks and Options Commentary. I'm Paulo Navarro. Today is Thursday, February 7, 2013. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 541. Nasdaq advanced decline differential closed at negative 555. We had 60 new 52-week highs for the S&P 500 and no new 52-week lows for the S&P 500. For the Volatility Index, for the dollar-weighted put-call ratio in Feb, we have a bullish reading of 2 with 19% of the total premiums paid. And the other importants are March and April, both of them neutral readings with 40% and 18% of the total premiums paid. Here we have the daily chart for SPX. We have basically a flat day down 2.73 handles for the day. We have a green hammer here. Very interesting. We continue to be on the positive 1, positive 2 sigma channel. I continue to have a 1522 target here on the SPX on the upside. For IWM, here we have it. We're bouncing. We broke the trend line intraday and we bounced back higher, which is normal. I'm looking here for a new high. I'm looking for 91.92 as my target on IWM. For the transportation index, here we have it. We have a new settlement close high, which is important. We did not make a new all-time high intraday, but we were fairly close. I'm looking for a new high here. I'm looking for 6,000 here on the trans index. For GLD, here we have it. We continue to test the 200-day moving average, and we today tested also the 50-day moving average. We're in a pretty tight range here. We're going to have to see which way is it going to break. If we're going to break down and go to the 158 level we've been talking about for a while, or if we're going to try to break out and maybe go to the 165.90 level. So keep an eye here. Very tight range. SLV. We continue to be also on the range here for SLV. We touch both sides, the resistance and the support. Tomorrow we're going to see a lot of compression here on this range. We're going to see which way we're starting to break out or break down here on SLV. No trades here right now. For UNG, this was one of the worst performing sectors. Here you can see we are down 4.4% for the day, and we continue to be on this triangle. I'm looking here for either a breakdown or a breakout. We'll see. We'll have to wait here, wait for the trend to develop, and then jump in it before getting into and try to see what's going to happen. For Sky, the cloud ETF, here we were down 3.22%. Most of it was Akamai, down 15%. But you can see here this upward trend line here. It respected it on the close, which was important here. I'm looking here for higher prices, maybe a bounce. But we have to see how that 200-day moving average continues to act. For ITA, this is the defense and aerospace sector. You can see here we're trying to form a head and shoulders above this trend line, the 70.6. I would be a buyer looking for the highs here. If we fail here, maybe looking for going lower and try to fill this gap here again completely. Now going to Apple. Very nice action today here. We talked yesterday about we continue to be on the range. We broke out of that range. We closed above it very nicely. I'm looking for 480 and 490 as my next targets here on Apple on the next couple of days. I'm pretty bullish here on this name. You have some levels to trade against it. Maybe put your stop against those levels. For Google, here we have it, which touched the 780 level. Today's high was 778, pretty close to our 780 level. I'm still looking for higher prices in Google. I'm bullish for the name, but taking into consideration, we are pretty close to the upper side of the range. For FFIV, we were down 2.6% for the day. I'm starting to see some weakness here. I think we're going to go and test the 101 level, the 200-day moving average. So keep an eye on this one to the short side. And last, Amazon. Here we were down 0.6% for the day. We broke the 50-day moving average intraday. We were able to close basically at it right now. I'm bearish here, looking for lower prices. The 251 level I talked about yesterday is my target for Amazon.